Welcome everyone to the Kindle Report. I see all the comments. It looks like some of you are showing up. Usually the room fills up a lot better. Anyway, folks, this isn't the end of anything. This is the beginning of something even better than what we've been doing. And I love hanging out with you folks as well. I just want to really thank everybody for being really loyal to the channel. Thank you to all the moderators that have kept Levi out of the room, all of those things. Listen, this is the beginning of something even better than what we've been doing. I know the daily analysis will be missed by a lot of folks, and I haven't actually put the entire forward platform together yet, but I will be working on this over the weekend and finally finalizing some of the thoughts. We were working earlier today, but there's so much stuff that I'm going to be able to give to you folks, knowledge, really going to be doing a lot more education, understanding the mechanics of the markets, also just understanding how to trade setups, a whole lot of stuff that's going to be a lot more valuable than the daily numbers and all the stuff that I do. And I get that analysis has been really useful. And there will be some macro analysis going forward. I just don't know exactly how it's going to be delivered. There most likely will not be any type of video on Sunday. This is a long weekend coming up anyway, so this is a really good time to give me some extra time to get some things together. A couple other things. So like I said, there's going to be macro analysis, education on market, functionality, mechanics, those type of things. I'm going to be talking and doing videos on managing your own money, how to manage money and not speculate with your money, 401ks, all of that stuff. I'm really going to change the content. And one of the, we'll just say, big issues with the channel is it really was facilitated going back to the pandemic back in 2020, mainly because of my institutional clients. I was trying to communicate to them, and I had a public presence there back in 2020, and all you folks found me just by getting suggested by YouTube. Don't know how it all happened. It all happened magical, and I really want to move this forward. We have built a really large community around the indicators, and there's more indicators coming out. There's good stuff, so I don't want you to be sad in any way, because I'm not going away. I'm just changing on how I'm going to deliver the content. And I would look at it as more of an expansion of the channel for the better, rather than looking at some sadness and we're going to miss you. I'm not going anywhere. Okay. I will still be here. I do have some issues that I have to pay attention to at a personal level that makes it harder for me to be here at this time at night, but that's okay, because I will be here during market hours. So probably, if you're not following me on Twitter, do that now. It's PortfolioXpert. There's no E in the expert. So portfolio, then just the X, and then PERT. And you can find me on Twitter. Follow me there. I'm planning on getting more of that alerts and things of that sort out. That's probably going to be the best place. And we will try to put some things on the YouTube channel. There'll be some messaging there as well. So still subscribe, do everything you're doing. So I don't want anyone, I see all these, we're going to miss you stuff. I'm not going anywhere. I'm still going to be here, just the content and what I'm going to give you. It was really interesting in the last several days. Whoever it was, maybe you're watching right now, said to me, "Hey, Bob, teach us how to fish. Don't give us the fish." I'm going to teach you how to fish. I have some really cool videos. We already went through a whole bunch of content that I want to create that's going to be really super helpful for everybody, especially if you have the indicators, and get some really cool stuff that I'm working on right now on the indicator level, including working on some trading models that are going to be released at some stage as well. Super excited about everything. There's some really amazing things going on in my life. So don't just know I'm still going to be here, and this channel is going to grow in a different way. So hopefully you folks will like what I'm doing and tell your friends, and we'll expand it a little bit further. So I think those are all my notes that I wanted to say to you. And let's see here, we've got about 120. So thank you again for showing up. Normally we're probably in the 200s, so maybe everybody's punishing me by not watching tonight, but there's no punishment necessary. This is really going to be a very, very positive situation as we go forward. You'll see. And those of you who've been in the live room, I'm going to bring in, probably end up doing at some stage, depending on the configuration and what I end up doing, there'll probably be some live streams and day trading and all kinds of stuff. There's so many things that I can show you folks that are going to be so much more valuable than me sitting here and talking about market grid and numbers and analysis and all that. If you hang out with this channel, you're going to know how to do this on your own. And that's the best thing that I can do for everybody watching this channel. So thanks again, everyone. And let's go ahead and get into tonight's video. So let's talk. Tomorrow, we got PCE numbers. Everybody's kind of watching those numbers. They're expected to uptick. I don't know how much. If we base it on what's happened in Europe, then maybe it'll be more than people expect. I have told you before, and I won't be talking to you every night on this, but I will be talking about this macro stuff. The Fed's going to keep raising rates. They're going to probably go another 25 basis points on the next quarter, on the next meeting. So expect that to happen. And of course, we still have all the rhetoric and the noise around the debt ceiling and all that junk that's going on. I mean, it was funny. I saw somebody, a tweet or something said, we're making progress. What does that even mean? I don't even know what that means. It's last night video was deal or no deal. That's what we need, a deal or no deal. And it was interesting. I saw somebody did a survey of whether we should default, and like 60% of the people said we should default. And there was a fair amount of votes. It was a fairly big channel. So I thought, that's interesting that most people think we should default. And why is that? Because everybody's tired of the spending the money and just running up the debt. And, you know, it has to end somewhere. I could tell you that I have been talking about this going back for probably, I'm going to go 6 years or more. I've written articles and annual reports on this. Like, what number do we finally hit in the debt ceiling that it's enough? You know, I remember we were at 8, when I wrote this the first time, we were at 18 trillion. So I said, was it 22, 24, 26? Here we are at 32, still going, right? And they'll pass the debt ceiling, and they'll keep spending, and we'll keep running $1 trillion deficits, and maybe there will be, the piper will get paid at some stage. We'll see how this all plays out, and you know, it'll just be over time that we're going to watch this. But trying to predict what number is that catastrophic number, then you got to hang out with some people that think they can predict that. I don't think anyone knows that number. And you know, even my good buddy Hugh Hendry is convinced that he knows. I'm not sure he knows, or I certainly don't know. But I would tell you that the realities of what's going on right now is it's going to continue to grow. Whether it breaks or not, I don't know. So let's go back, just step back a little bit here, and let's talk about the debt ceiling just a little bit more. So when they do solve this, they're going to need a lot of cash to replenish the treasury. So the coffers are basically empty. I saw somebody post, don't know the accuracy of this number, down to $49 billion. That's like $5 in your and my account. That's basically you're out of money. Okay, so that's definitely there. They're going to raise just, you know, hundreds and hundreds of billions of dollars. Maybe it will be $1 trillion of cash. I don't think they're going to need that much, but it's going to be a fairly big number. It's all going to happen in the short end of the market. That's why you're seeing some of the things that I've been talking about for a while, which is we're going to see it's shocking that 2 years already at the 450 level. And if you recall, just on analysis that I've been doing over the last couple of weeks, we have Fibonacci projections up in that 450 handle. Even, I think we'll go through it here just shortly, but there's even numbers, you know, closer to 5 on the 2 year. So it's very interesting what's going on there. So just know that that's going to be a thing. So the front end of this curve is still going to be juiced up. They're going to have to raise a lot of money, and they're going to have to pay to get it. And it's going to be interesting how they transition the yield curve and how they ultimately move some of this money back into the curve, because ultimately you've got to get to a point where you can finance things more than 90 days, right? So you're going to have the initial will be 90 days, and then they're going to have to raise the money in the 5-year, 10 and plus maturity. So we'll talk about that later at some point in time. So a couple things, just looking back on yesterday, pretty decent day. You know, S&P up 0.88. Of course, NASDAQ was up 171, and that's all about NVIDIA, right? So we know that. But we had GDP came out, revised upward. It's now up 1.3 instead of 1.1. Not big, robust numbers, but definitely not dropping either. So that happened. Claims, folks, claims continue 229. If we were in a recessionary level, you'd be looking at 350,000 to 400,000 claims would be more of a recessionary number. And with the current population, it might even be a bigger number than that. So these are historic low numbers. There's no way that, you know, we're even getting close to any type of recessionary type situation here. Continuing claims dropped 5K down to 1.794 million. I've talked about this before. Around 2, I would be concerned if it got back over 2 million. It's not going to do that right now. So we have a PCE coming out tomorrow, up 0.3. Last time it was up 0.1. So if it comes in a little hotter, that, like I said, if we come in better, higher than like Europe did, and its numbers are a little more sticky, then just fully expect the Fed to raise rates another time. If you recall, and you go back, those of you who are regular on the channel, you know I was talking about that we would see some sort of 550 would be the terminal rate, where that'll put us right there. It'll be 5.25, 550, and maybe there's even more beyond that, depending on how sticky these numbers are. And I won't go into this, but this is probably a video that I will do as we go forward, and I do some macro videos, but I'll be talking about in detail some of this sea change concept that I presented in the live streams. And that's another thing that I think you folks are going to find out as we go forward, is I'm going to be able to focus better on certain items and make those points rather than mixing them in the middle of these live streams. And that's great, but you know, so much of what I'm saying is getting missed and no one ever hears exactly what's going on. So just know that is going to be, there's going to be a lot more focus going forward as well. So just looking at a couple other things here. It's shocking. I'll go through the technicals here in a minute. And it's nice that I'm assuming that I didn't even look, but I'm assuming that my voice is in sync tonight. It should be fine. But let's go ahead and let's get into database, because a lot going on there, and let's get into the technicals and get through tonight. And I'll come back at the end, maybe take some Q&A. We'll hang out for a little bit at the end of this show tonight. So let's go ahead and take a look at the Wavetech database. All right, so we have done it, folks. We are below 42%. We're at 35.6. We have 2,180 sell signals for the open in the morning, 233 buys, so big negative rotation going on. And we're just looking at this thing deteriorating internally. Now, since we're coming into Friday, we also are going to get our intermediate models to come in, and those I suspect we'll see some selling as well. I'll flash over here real quick to the full screen here, and let's just go over to research and bring that up real quick. But we're at 56.56. I suspect we'll see some selling coming down. And the reality is, folks, we're at 41.50 again. We haven't moved, and the needle hasn't moved much. I know it feels very dramatic from time to time, but we're not. It's just flat. You'll see when we go through the technicals. The hourly chart's ridiculous. The daily chart's ridiculous from the standpoint of lack of movement and volatility. It's just absolutely crazy. But I do expect to see this intermediate database back up a little bit. I don't think it'll be big material, but I do think there'll be some relative selling just looking at the short-term database getting to the level that it did. So, all right, so as we look at the hourly chart on the S&P, and folks, like I said, as we go forward, I'm going to make sure that you folks can look at these things. You have those of you that have the indicators, there's quite a few of you out there that have these things. And so we'll be making sure you understand you should be able to do the same analysis I do every night. And so we're looking at right now, there was actually some really good moves signaled yesterday. I hope you folks were able to catch those, some great moves, especially around this reversal pattern that happened, is it just flipped on a dime here this morning. So these are, just remember when you're looking at my screens, these are Pacific time that you're looking at. So, but we've come right back into these moving averages and we're just flat. I think we drift probably sideways here. We should stay above the 41.44. We'll look at the daily market grid here in a minute. And the patterns as I'm pulling is just sideways. If we look at this whole range just going back a couple days, we've spiked up, but we end up right back at this 4,100 range, right at 40. I put it, there's a line right through the middle here, which is 41.50. So if it's kind of a boring conversation that we've been having for a while, but we went 39.50, 40.50, and then we went 40.50, 41, went 41 almost, and we got into 42 handle. And here we are back at 41. And we're like one good day from being back at 4,200. So we're just looking at this pivotal range that we've been in. And as I've discussed in the past, when we go to the dailies, we've been in this same range going back to March of last year. So the markets have done nothing. And we've went through all kinds of gyrations for the last year. Me and everybody out there getting bullish and bearish, and just in the end, it's just locked into a trading range. I remember talking about being locked in this trading range going forward, and folks were telling me, oh no, the market's going to collapse. And, we had that huge negative sentiment that was out there for a while, and it's growing again. It looks like the consensus trade that we're going to roll over, get a flash crash, whatever, those things are still out there. But I'm telling you, it's a coin flip here. The only thing that I will go through tonight to make sure I tie everything together for you coming in next week is looking at the weekly and the monthly charts. We're coming in to the final few days of May, and so far sell in May and go away. There's not been any real negative. Maybe there's some negative rotation as we come into the final week, but right now it just looks really choppy, and you'll see what I'm talking about here. So let's go ahead and go over to the daily. And the daily, this is what I was talking about. It's just absolutely ridiculous. Look at these moving averages. 10-period moving average, 41.66, 21, 41.53, the 40, 41.48. So everything's basically the same value. The PPMs are all flat. You look at PPM 1, 0.03, basically flat. PPM 2, 0.001, it is perfectly flat. And then look at PPM 3, 0.0089. So absolutely no directional movement. The whole point of these PPMs, the price pressure momentum, is absolutely not telling you anything. The algos suggest that we have a potential for a slight upside over the next couple of days, maybe coming into next week. Like I said, we've got a Memorial weekend coming, and so it's going to be a long weekend, and we'll see how everything sets up. But there's really absolutely nothing here. So what you have to do in this scenario is go to the next level, and let's go to the weekly chart. And it had been looking fairly positive. Now we're starting to see the weekly starting to flatten out here. And one of the influencers that are out there from the standpoint of market, when we go to the NASDAQ's still driving the game forward, especially with the NVIDIA numbers that we had come out yesterday. It's just the bullishness in the NASDAQ just continues, and I'll cover that in a minute. You can see here, even on the weekly, it's flat. PPM1 is up 0.49, so that's bullish. We're trading right on that line right now. 41.52 is the last trade. 41.42 is the 10-period moving average with a rising PPM at 0.49, PPM2 0.34. And so PPM 1 and 2 are both in trend mode, and it looks like we're going to maintain most of that. But as we go through the next couple of weeks, coming into June, it looks like we could fade a little bit, and ultimately we may end up trading down to the toward the 40-week moving average, which is basically at the 40 handle, 39.81 right now. So it's up just slightly, but not a whole lot. So we could easily see the 40 handle again. So just know I would watch for the market grid to what it does as we come into next week. If it turns down, if we finish where we are now, we'll probably see a slight turn down. So all of a sudden the 21 would be in play, which is 40.77. So we could definitely see something under the 40 handle. The database has moved into the 35 percentile range on bullish. So there's vulnerability to the downside now for sure. There's not enough symbols in a short-term trend to do much. Now, the one thing that could happen, and maybe it does happen, and that would be that we're going to get, maybe the debt ceiling gets done, and that is perceived to be bullish or at least supportive from that standpoint. So you'll have to watch and see what happens, folks. But these are just trendless markets, and this weekly chart that we have here right now is actually just, you can see going all the way. If I consolidate this, we can go all the way back here to May of last year, and we're looking at the 40 handle in here. 41, we were trading 41.26 goes right through the middle over here of everything. So I think I discussed this last night. I think 39.14 is the midpoint between the low of 35.02 and the 40. This high over here in August of last year at 43.27 was the high. So we're just oscillating above and below those numbers. So right now, like I said, the only thing that we can look at, there is some positive structure to the weekly chart. So real quick, touch on the monthly. And this is the thing that I think is probably most interesting. Is the monthly, you can see we've just been in this long consolidation going back to May of last year. You can see it's just continuing in this sideways range. The only positive thing that's here is that right now the 40-period moving average is still in. So PPM 3, 0.59, that's your major support here at these levels, which is 39.02. So there's a lot of room for movement as we come in. So it looks like if we close under next week, if we close under 41.88, or just close where we are right now, that'll be a negative close. And then we'll get a new market grid. And it looks like to me that we're just going to get what I call the box formation in the market grid, where it just squares off, just suggests there's more sideways. If it turns down, then we start to look at the potential. There's still some live Fibonacci targets down here, and they are right now, I'll bring those up over here, 35.84 on a monthly basis is the bottom end of here. But I would look more at the market grid for the monthly when you come in. You can just look at this last month. The market grid for this month was. Let me just get the range here 1 second here so we can get this. So we had 42.27, 40.62 for the month. If we look here, S1, here we go. S2 was 40.72, so we did S2. And then we've got R1, 42.43. The high was 42.27, so it fell just short. So we stayed in a very narrow range. I suspect that it looks like, based on the algos, that we could still have a slight bias to the upside. So we'll see what kind of market grid we get there and watch those numbers from that standpoint. All right, so we'll start with the weekly on the NASDAQ. And this angle of attack on the upside, you may recall I talked about the potential. If we got down to the 10-week moving average, that would be your buy on the NASDAQ. We did that last week, and we got down, the low was 13,350, 13,217 was that 10. So I said, if we get close to that, that's going to be your buy point. You're going to most likely stay above that line based on the PPMs. On PPM 1 is at a plus 0.98, PPM 2 1.11. Anything over 0.25 is a trend, and it looks like it's going to stay elevated for a number of weeks. So this angle of attack is going to stay in play. So I would look to the NASDAQ to continue to pull things higher. I spent about 5 or 6 minutes listening to some folks on a Twitter space today, and I thought it was kind of interesting. Every one of them talking about how the NASDAQ is overextended and all that, and I don't see it as overextended. I think we have several more weeks. So if anything pulls this market higher, it will be the NASDAQ continuing. And I know if you just look at everything, like people wanted to, get out of sell. I guess if I showed you where Wavetech owns NVIDIA, it's up $200 some from the buy point. And if you use the dailies, it's up like, it's ridiculous how good those trades are. So those of you who have Wavetech, hopefully if you're following any of these stocks, you've caught this really good, including Meta and the whole bit. I mean, these trades were super easy. They were identified by the models, and that's exactly how it's unfolding, and it's not over. So if you are using Wavetech, just hang in there and make sure. And I would suggest those of you, if you haven't used Wavetech, maybe you want to go in and sign up, because we prorate it to the end of the month. You can cancel by the end of the month, but you might want to check out and have these daily values as you come into June. It might be really handy. So you go to kendallreport.com/Wavetech, Wavetech, and you can sign up there. It's $3 and I think $3.80 a day. And all you have to do is cancel if you don't want to go on. But I would suspect it's going to be handy to have that thing hanging around next month. So anyway, all of these trends are very bullish. Now let's take a look at the daily. And daily still going down. A couple of days ago, this was the 10-period moving average. We dipped just below it. 13,647 was the 10. We got to 13,566. And of course, we reversed, got an RTX sell signal yesterday. So we had, let's take a look here. And the RXT was 13,883. close 13,976. So we should have probably a little sideways here, probably some reprieve from some of this, but we're looking at all of the PPMs are in trend mode. PPM 1, 0.40, PPM 2, 0.25, PPM 3 is at 0.12. So it's not in trend mode yet, but I do expect that it's going to roll up. All we have to do is stay up here around the 10-period moving average for a few more days. We should start to see some potential acceleration on the upside on the daily NASDAQ. All right, so here's the RTY. Russell continues to be in this sideways range here. Just look at these moving averages. It's interesting that they're slightly positive to flat, but once again, they're almost all the same values, 1773, 1763, and 1775. So there's no directional movement. We did trade up to the 200 a few days ago, got rejected off of that number. I think we stay in this range that we've been in. I would look at the market grid for guidance for what's likely to happen. I'll do weekly just because of the change in the channel here. Weekly's coming back down. What's interesting is the weekly suggests that it's potentially that we could see a failure on the weekly and start to see it drift even lower. Maybe that has something to do with maybe the short end of the curve getting hit much more, and maybe there's some pressure that comes into some of the banks again, maybe a secondary move in on the banks, and that could cause some issues here with the Russell. So here we go to the 10-year. This is interesting because I've mentioned these Fibonacci targets on the upside here. Check it out. 401, 429, and 450 on the 10-year. And we've got this upward slope. The PPM 1 is at 1.20. This is very bearish for bond prices, and looks like we're going to see even more acceleration on the upside. Now, this is the weekly chart, and all of the numbers are starting to look like we're about to get more acceleration on the upside here. So rates, I was talking about this a while back, probably in the last couple of weeks, that I expect all of the rates to rise. So as that front end starts to pull up, we're going to continue to see the back end start to flatten out. My original scenario was that we would see the yield curve really flatten out substantially, where the back end of the curve starts to move a little faster. And that may not be the case just because of all this financing that's going to be necessary after tapping out the treasury like it is. So we'll see how that all plays out as we go forward. But we're looking at these upward slope is really on the upside. I'm going to stick with the weekly charts. Let me go to daily just real quick. Look at the angle of attack on a daily here. Look at this. It's almost like a 45-degree angle. We did get an RTX sell signal on a short term, but the PPMs are just off the map. 1.16, 0.51, and 0.17. So we're just seeing all of this stuff turn up. We got way above the 200-day moving average. And we're also looking at the 200, Wavetech 200 down at the bottom here is up 0.14. That is like a screaming bullish number from the standpoint. If I expand this out, you can see the angle. I'm going to draw something in real quick because I want you to see this. This is pretty substantial, actually. If you look at this 200 here, it is at a pretty decent angle. Let me replace that a little better here. You can see it's got a decent upslope here, and then you've got this vertical moves here, this angle of attack. So markets are just going to keep going up and probably hitting some of those weekly targets, maybe hitting up in the 430 plus range. So that's going to end up being very interesting as we go forward. Let's go to the 2-year. So same kind of angle of attack here. The only thing that's happening on a 2-year, it looks like it's going to soften, but I would expect to use a simple 10-pair moving average on the yield. It's at 4.28. We printed up here at 453. Yesterday, actually I believe this is live right now, so we're going to stay well above this line. Look at the market grid. Right now, 440 is the extreme on the downside. So we're looking at a continuation on the upside, probably staying well above the 448 plus, and we should climb this line much, much higher. There's currently no Fibonacci, I don't believe, no, there's no Fibonacci targets to the upside. All right, crude finally took a hit yesterday. We got up almost to those numbers. We printed up to the 74 level. I was looking for a 75.50. We fell a little short, and now we're right back into this 10-pair moving average. I'm going to expand this out. You can see this downward trend here, and that's right now the PPM1 is still positive, so there's going to be a bit of I usually call it like a magnetic field to stay around that value, around 72, so it wants to come back into this range. We'll see when the next week if this grid can turn up, but I still expect to see us stay in this bottom end of this range. I don't see us getting much under the 70 handle. We should stay in here, but this downtrend is fairly substantial. This is a daily chart. So let's take a look and let's go to weekly real quick here. And the weekly, this is actually, I'm glad I looked at this. There's some downward projections here. And it almost seems rude to mention, but 65, 58, 53 on a weekly. You've got the 200-week moving average, which we've challenged 3 times in the past and rebounded off of those levels. That right now is at 67. But if you look at these PPMs here, they're still positive, but it looks like we're going to get a big reversal as we come in next week. And you see the downward slope of the predictive SMAs are telling us that we're likely to continue down in this slope, probably heading back toward these lower end of the range. So that little move up to that 70, 75-ish range was probably about it from the standpoint of that little rally. So now we've got some potential negative trends coming into play, especially here on the weekly. So I would look for a potential of even getting down. If we do print through 70, then 67 is going to be your next target at 200. So watch those really, really closely. Next, we'll talk about gold. Just seemed crazy. We were talking just a few weeks ago when this thing was up here at 2085, and then talking about how these algos were suggesting we're going to see this big decline. And I thought maybe it'd take a little longer, but we've already printed down to 1936. I would suspect If we don't hold right here, the PPM2 is at 0.29 weekly. If we can't hold this right here and bounce back a little ways toward that 10-period moving average back at 1997, now that number is declining as well. So as we come into next week, you're looking at probably about $5 or $6 lower. So we'll just call it 1990, 92 is going to be resistance. If we don't bounce here, then it's, I'll use a monopoly analogy, do not collect 200, go to jail. Looks like we could print down into the 18 handle pretty easily. And I think this has everything to do with these rates and those type of things. Now, something I said I would do, and I'm going to do it right now. We're going to go through and let's cover the Dow real quick. I've been meaning to cover this for a number of weeks. Look at this upslope on the Dow. We've got a very bullish Dow coming. And I suspect, I think I saw someone post that most of the auctions that were done in the last couple of days have been foreign interest. And this is why they're buying Dows and buying these bills up. So, I mean, why wouldn't you grab 6% or more, 7%? So everybody's buying these things. So the Dow is getting bid. You can look at here, the PPM 1 and 2 on the Dow. This is a weekly chart here, folks. So we're looking at multiple weeks on the upside, ultimately getting back up to probably 103.5 to 105 on the Dow. So don't get too negative on this one. And it looks like to me, and I remember going back a number of weeks ago, we were starting to see this turnaround in the algos, and they're following through. So the last 3 weeks have been very strong. We've almost traded up to the RTX level. 104.31 is the high. 104.33 is R3. So we've got another session. Maybe we can print up to RXT. But ultimately, that downward slope 40 is going to be your target. 105.65, probably 105 range. We should hit some short-term resistance there, but it looks like it over the next, let's say, 4 to 6 weeks, we are likely to continue to see higher prices here on the Dow. So that just goes hand in hand with this negative gold situation. All right, so here we go, Bitcoin. I've been making this analogy for weeks now that the Bitcoin chart looks very similar to the gold chart, and you can see the algos are really starting to turn south here. We got PPM1 down minus 0.57. That's big time downtrend. This is a weekly chart on Bitcoin, and also the PPM2, PPM3, everything looks like it's coming under pressure. And the target, if we get through the 21, which is at 25,237, we traded down to 25,878. We get through that level, and you're looking at basically a given down to 22,000. You're going to see quite a bit of selling coming in here back to 22,000, and then there'll be a story that will be told from that point. And I think this stronger Dow situation is affecting all of this stuff at this point in time. Okay, folks, we made it through. I'm going to take a look at some of your comments here. Let me just see what's going on. Yeah, I see FF talking about, I didn't make my Peter Schiff comment, but yeah, they're going to punish Peter for being bullish gold again at the high. He's done it above 2,000 multiple times in the last year. So that has been a thing for sure. Just looking at some comments here. Let me do something so I don't have to look so sideways here. Bear with me. We're going to get that weird stuff if I go over there. So a problem with OBS. Anyway, yeah, so I'll just stay here. Let me take a look here. Yeah, like I said, somebody's making a comment about the dollar going up. If it gets up to 106, the markets have to go down. I'm not sure that's true, but as I was talking about, there's some risks down to, down into the 40 handle here on the S&P. So like I said, our database is down to 35% bullish, which is below the 42 marker. So I expect that will be something that you'll want to keep watch on. And we do have some vulnerability here to the downside. The only thing that's going to hold this market, folks, is that NASDAQ. That upslope in the NASDAQ's that's going to be your catch. You just know that there's a lot of NASDAQ stocks in that top end of the S&P. So there's going to be a relative strength there between those two. If you think about all the coverage I've done for years on this channel, when we're looking at that, it's just the NASDAQ even has been more negative, pulling everything down, or positive. And, we're still well up over 20% on the NASDAQ. So I went through all the upslopes and all that right now. There's still a positive undertone on the NASDAQ. Doesn't mean it can't pull back, it can't consolidate. It just, on balance, it has a relative strength that's going to continue, it looks like, as we go forward. So there's no way, especially with this higher interest rate, higher dollar, all this stuff, there's definitely some negative stuff coming in. And like I said, I'm still going to be, I'll come up and do some macro analysis of what's going on here in the days and weeks ahead. So I'm not, like I said, the whole concept here in the channel is going to expand. I think it's going to do a lot better job of helping you folks to do what you said. Remember when you first started watching me, I used to say, hi, I'm Bob Kendall. I share my 43 years of experience to help you manage your wealth and help to manage your portfolios and protect your wealth. Going back kind of to the roots here, because that's really what I do. We still run billions of dollars with institutional accounts in the markets, and that's still what I do, and it'll probably be a big part of what I do for a long time. So just know that I'm going to bring some of those insights there, and hopefully you'll be able to use some of the other tools and things that I have available to manage your wealth and protect it at the same time. So let's just see here. So anybody have a question for me? Otherwise, we'll just call it and go forward. Yeah, so Chi-Town Tony. Yeah, I agree. Building portfolios. When we first started with offering Wavetech out to you folks, we were doing really good training and stuff, and then I got crazy busy and I had to pull back on that thing. So there's definitely going to be quite a bit of stuff that we're going to do to help that building and constructing portfolios. I still think there's a lot of opportunity out there, and markets will move forward, and I think there'll be some opportunities to do some ETF hacks, all that stuff. So folks, just know I'm not going anywhere. I'm still here. I will have some macro analysis for you, and I will also be doing a lot of other things. So it's going to take probably the next week or two to kind of get my legs under me on what I'm doing and some of the other activities I have here. I know I never showed you guys, if you could see where I'm sitting right now. I wish I could put a camera in there. Maybe I'll do a video that shows you, but this environment that I'm studying in is absolutely insane. And so I've got 6 32-inch 4K monitors there, 55-inch TV over here, and then 2 34 wide gaming monitors here. And it's all in a 24-foot desktop trading environment. So it's pretty amazing. I've got a contiguous mouse I can move across the entire environment. It's absolutely epic. So just know you'll get a chance to come in here when we start doing some of this educational stuff. Hopefully, going to flip the camera so the backdrop will be all of this stuff, and we'll be doing a lot of interesting stuff. So thanks again, everyone, for everything. Yeah, I see Pamela's asking that inflation hiding recession. Yeah, I don't know if it's hiding it. Just drive around, folks. Show me the recession. Right behind my studio here is a gas station, truck stop, all that. It's crazy. The activity. When they first built that, I was worried I was going to have 18-wheelers like driving through my office here, and it actually had. They put up a sound wall, and it's been just fine. But the point is that everything is just really going crazy yet, and whether inflation or not, there's just a continuation. Everybody is. I don't see it backing off. You see it through the employment numbers, the claims, all of that stuff. We're just not getting the kind of numbers that you would expect to see. And I go out into the real world and do an analysis. I have to be down into Phoenix and Scottsdale in the next week, and so I'll get a chance to do a further survey on 5 million of my best friends down there. So, but I expect to see what I see everywhere, which is things appear to be very robust, and I'm not sure where the recession's coming from right now. And I know that everybody thinks because there's an inverted yield curve that equals recession, and the answer is no, it doesn't. And the reason why the yield curve is actually inverted like it is just because the Fed held rates so low artificially for so long. I still argue that we're in a normalization period of interest rates, and that's going to take a while. We may be sitting here next year still talking about that. But just know also that I'm going to continue dialogue, talking macro stuff. You're still going to have some guidance from me. Just looking here at some comments real quick. Yeah, I think this is going to be it, folks. Yeah, I see Bo commenting my portfolio is not so good. Selection's everything, for sure. Anyway, I guess this is going to be it, folks. Like I said, there will be live streams from time to time, just not every day. So appreciate it. Matter of fact, we got up to about 250 live. So thank you again so much, everyone, for participating. And just stay here. You're going to see plenty of content. And the content that I do right now has a shelf life of 1 day. So I do live content, and it talks about tomorrow's activity. So I've got to recreate it every night. So what I'm going to do is create some things that are going to have much better shelf life, more educational, hopefully get some folks that are struggling with some of their portfolios to get better portfolios and the like. So anyway, folks, thank you so much for being part of this community. And we got a lot to do going forward. So hang in there. Have a great weekend. Those of you in the U.S., have a great long weekend, and Good luck trading next week. We'll talk to you next week. See you later. Thank you again, Smurfs. You're awesome. Yeah, there's going to be live streams, folks. We'll still be hanging out together. You'll see. Yeah, I wish we could get our Discord going. That would be a great place to continue this stuff. Yeah, we have a Discord. We just haven't used it very good. We need to figure that out. Yeah, I'm going to need help to drive that. So if you're listening and you are good on Discord, reach out to me, info@Kendall Report. Maybe we can figure out something. I would love to keep the community talking and debating. That would be awesome.